Tesla's stock has outperformed the market for the past 5 years. Is this a positive indicator of Tesla skyrocketing to $5,200 in the face of several headwinds in 2022? Or is Tesla due for a more severe correction? Looking back a few years though, this stock has been on top of the performers among large-cap stocks. The main question is whether Tesla can defend its lofty values in the face of several market challenges this year. Is it simply a matter of time before the downturn becomes more pronounced, or will this stock do an about turn and go as high as $5,200? Have you considered Tesla stock as a suitable investment? Who you ask is the determining factor. How is Tesla stock currently faring? How is Tesla dealing with information? What factor do we think will make Tesla stock skyrocket in the near future? Keep watching to find out. Tesla has been a loser in absolute terms and relative to most market benchmarks so far in 2022. As the automaker grapples with rising inflation, experts say the price of Tesla may rise once more to deal with the current economic situation. I believe they'll announce another price rise in the next 2 weeks. They, like Netflix, Amazon Prime, and other stalwarts, have the potential to pass inflation onto the customer, Wedbush tech analyst Dan Ives stated on Yahoo Finance Live. But what does this mean for the stock price? Tesla still has an outperform rating and a $1,400 price target from the widely recognized tech analyst. Ives' forecast of a Tesla price hike comes on the heels of Tesla CEO Elon Musk's latest inflation warning. In a tweet over the weekend, Musk stated, "Tesla and SpaceX are feeling severe recent inflation pressure in raw materials and logistics." Musk followed up with a tweet noting that many businesses are experiencing strong inflationary pressures as commodity prices rise in tandem with Russia's war in Ukraine. This isn't Tesla's or the electric vehicle industry's first price increase. Tesla increased its prices many times in 2021. However, the stock did not suffer as a result of this. After gaining by more than 740% in 2020, Tesla stock increased by nearly 50% in 2021. According to Electrek, Tesla recently updated the price of the Model 3 and Model Y long-range variants by $1,000. Also according to Electrek, the corporation raised prices repeatedly throughout 2021, so by our estimates, there is really no need to be concerned. Tesla's stock has lagged the tech-heavy NASDAQ 100 and the autonomous/electric vehicle peer group so far in 2022. However, Tesla has outperformed other high-growth, high-value names such as those in ARK Innovation ETF. Tesla bulls have good reason to believe that. Given enough time, the stock will continue to rise. According to one source, the electric car sector is predicted to grow rapidly in the next few years, with a compound annual growth rate of 23% through 2027. In the end, the Russia-Ukraine issue and the rise in crude oil prices could be beneficial to Tesla. Tesla's products are one response to the world's reliance on hydrocarbons, which was weakened by havoc, including inflationary pressures in recent months. Then there's the argument that the glass is half empty. Despite all of the macroeconomic and geopolitical obstacles, Tesla's stock has grown at a compound annual rate of 77% over the last 5 years. Isn't it past time for stocks to de-risk a little more as they have in the past? The recent price activity in Tesla shares can be seen in 2 ways. The silver lining is that Tesla has held up relatively well during this year's sell-off. When compared to the over 90% annualized returns between 2017 and 2021, Tesla's year-to-date drop of 28% in 2022 has been very minor. However, despite supply chain issues, Tesla delivered over 936,000 cars worldwide last year, an increase of 87% over the previous year. In fact, Tesla is gradually increasing its brand recognition in Japan, with the result that Teslas have become the status symbol for people who live in cities with EV charging stations. Japanese buyers saw a 24% reduction in the price of the Model Y a year ago as part of the company's pitch to the Japanese market. The 5 million yen reduction equaled a discount in China. We believe Tesla dominating the Japanese market will have a big impact on the stock in the future. While electric vehicles account for only 1% of total car sales in Japan, new registrations of electric vehicles imported to Japan peaked at 8,610 in 2021. Tesla's popularity, however, propelled the company forward, as it sold over 5,200 cars in Japan last year, up from over 1,900 in 2020. Importantly, the all-electric car maker from the United States is steadily gaining market share among Japan's young and wealthy. Tesla has allegedly been going hard with charging facilities in Japan. They're primarily located in urban locations. According to reports, the corporation has not stated how many chargers it will create in Japan this year, but it's now recruiting for a project deployment manager for charging stations. With a high per capita income and a passion for high-end European automobiles like Mercedes-Benz, Japan's growing interest in Teslas is a significant step forward for the country's early adopters. According to the Japan Times, this is largely due to a shortage of charging stations, electric vehicle-specific parking places, and adequate subsidies, as well as the fact that electric vehicles are more expensive than gasoline vehicles. Electric vehicles in Japan looked more abstract than a sign of the future, given the country's long history with hydrogen fuel cell vehicles and conventional hybrid automobiles. Hydrogen is required for a number of industrial operations, including the manufacturing of ammonia, the primary component of climate-polluting artificial fertilizers. Instead of the fossil fuels that are currently utilized, hydrogen for these uses can be derived from renewable sources. However, as has been demonstrated, H2 is significantly less efficient than batteries as a transportation energy storage medium, 22% well-to-wheels compared to 73% by one analyst. It would necessitate the construction of massive new infrastructure. Fuel cell vehicles' advantages, which are longer range and faster refueling periods, have been gradually undermined by advances in battery and charging technology. Furthermore, the push towards hybrids like Toyota's Prius, which began approximately 25 years ago, has proven to be the ultimate mistake, putting Japan behind much of the world in electric vehicle production. According to Reuters, Toyota has committed 8 trillion yen, or $69 billion, to electrification through 2030 and intends to sell about 3.5 million electric vehicles worldwide by then. Who's bound to greatly benefit from this? The leading brand, of course. When Tesla first arrived in Japan in 2014, the country's limited market of 3 major automakers showed little interest in electric vehicles. Now let's fast forward to the year 2022. The Japanese government has committed to becoming carbon neutral by 2050 and to substantially cut in half emissions from 2013 levels by 2030. By the mid-2030s, gasoline-powered vehicles will be prohibited. The country has also increased the number of subsidies available to consumers, bringing the total to a maximum of 800,000 yen, or $7,000. The love affair with Tesla is certain to continue, as the brand's attraction has been highlighted by its embrace from Japan's government. In addition to this, Panasonic, their partner in battery technology and production, will be setting up a factory in Japan. This can only spell good news for the electric vehicle brand's stock. In a news release issued Monday, Panasonic announced, Panasonic is developing a new high-capacity lithium-ion battery, the 4680, in numerous locations throughout Japan. This statement emphasizes the battery supplier's extensive R&D efforts on the cells. In order to prepare for the complete deployment, the company will gradually increase production capacities. The business, which is usually regarded as the world's third-largest EV provider by production capacity, announced that it will build the cells at its Wakayama factory in western Japan. Meanwhile, mass production of the new cell type is underway at several locations around Japan, according to the business. This is great news for Tesla, as it's in line with their plans to conquer the Japanese market. With time, we believe the battery technology Tesla is currently harnessing will create even more of a gap between the company and other electric vehicle brands, making the stock soar even higher. Despite chronic supply chain challenges that it expects to be resolved only next year, Tesla Incorporated forecasted that vehicle deliveries would comfortably climb by more than 50% year over year in 2022. Skeptics were baffled as Elon Musk, on behalf of the world's most valuable automaker, gave an encouraging forecast after the company reported record quarterly sales that exceeded Wall Street's projections. So far, so good. Deliveries are indeed climbing as Tesla continues to dominate different markets. The value of the company is sure to grow and eventually surpass current projections. What are your thoughts on Tesla taking on the Japanese market? Do you think the Panasonic batteries are going to make a huge difference in Tesla's valuation? Comment down below.